All right, so we're going to be going over four stocks that have huge buying opportunities for 2023, especially the first half of the year. So a lot of people are anticipating that the first half of the year is going to be pretty rough or at least flat. And we're really going to see stocks recover during the second half of 2023. So, for the first half of 2023, these are four stocks you want to pick up. The first one is going to be Bank of America. Bank of America, very solid value stock, has a dividend yield of 2.60%. So, pretty solid stock overall. As we checked in the past year, it is down 25%, but overall it is pretty stable, and especially since the Fed continues to raise interest rates, that's really going to benefit stocks and companies such as Bank of America, and that's going to give them a higher net income. So, Bank of America is also one of Warren Buffett's biggest holdings in his portfolio. He loves this stock, and the next stock on our list is going to be Johnson and Johnson, another safe value stock, and it is up actually in the past year 5%. In the past 5 years, it is doing pretty well as well, and it also offers a pretty decent dividend yield of 2.52%. So very solid stock overall, and overall, Johnson & Johnson's a very safe bet, especially since you're always going to need their products year round, regardless of what the market does, which is why Johnson & Johnson is a very great stock to have in your portfolio. As we can see, it is doing pretty well in the past 5 years, despite all the downturns, just because everyone needs their products. And with dividends reinvesting, you are going to make a lot of money in the long term just by holding the stock. So next stock on our list is going to be Amazon. Amazon is a stock that is down quite a bit, down 48% in the past year. It is up 46% in the past 5 years, but it's pretty much given up all its gains during the past 2 years, as we can see here. So now provides a very good buying opportunity for Amazon if you're looking for a growth stock. Amazon, it's a huge tech giant. They have a lot of cloud services, big e-commerce platform, and overall you can't go wrong buying up shares of Amazon for that huge growth potential in 2023. And last but not least, we have Warren Buffett's own company, Berkshire Hathaway. It is at you can either buy shares of Class A or Class B. Class B is going to be a cheaper stock price. As you can see, Berkshire Hathaway has done pretty well in the past year, considering how terrible 2022 was for the stock market. Seeing a positive return on a company is a great thing we're looking for in a stock. In the past 5 years, it is up quite a bit. It is up 57%. And the reason why Warren Buffett's company is doing so well is because it invests in a lot of dividend stocks, a lot of safe companies, and overall, it continues to reinvest those dividends back into the company and acquiring other companies. Think of Berkshire Hathaway as a huge ETF in the stock. So it's well diversified. You can honestly just have this one stock in your portfolio and it'll do pretty well. But as we can see, it does not offer a dividend yield because, as we mentioned earlier, all the companies inside of Berkshire Hathaway, Warren Buffett just reinvests it back into the company for that growth potential. And yeah, it's doing pretty well, especially in the past year, up almost 4%. So this is going to be a safe bet for going into 2023.